later in the morning, you're going to hear from a gentleman named Joe DiNapoli. Joe DiNapoli, for those of you who don't know him, trained me in early 80s. So a lot of people have probably heard of Fibonacci analysis, may not really know how it works. And this gentleman was an engineer and designed the Fibonacci analysis for the stock markets and took it to the, basically took it to the world. So this has created a trading revolution. This trading revolution now is to a point where the independent trader, sitting at their home or their office or their laptop, wherever they might be, now has the same tools that only used to be available to the professional on Wall Street. I want to tell you a little bit about me because I think it's important that when somebody speaks to you, they've earned the right to speak. When I tell you some chart patterns that you're going to see today, I have traded those chart patterns probably 100,000 times. Okay, welcome back. As I told you when I started my presentation, I spent a lot of time in the early 80s trying to go around the country and find the best of breed in the disciplines that I was looking to become educated in. And I paid a lot of money and spent a lot of time, as I said, with George Lane and Paul Tudor Jones and Richard Dennis. And many of those names might not mean anything to you unless you were a commodity trader in the early 80s. But I can tell you that those individuals' names were legends in the trading pits. These are people that are the best of the best at what they do. And what I started to learn, I was managing a very large institutional portfolio at the time, and I learned about this new technique called Fibonacci analysis for picking low-risk entry points and logical objective points to exit my trades. So I did a little homework. We didn't really have the internet at that time in history, and so what I had to do is ask a lot of questions and find out who was it that I could learn Fibonacci analysis from. And it was a major turning point in my life personally and in my career. And I found this gentleman who had been doing this for, at that time, about 15 years. And his name is often used in terms like the father of Fibonacci, the founder of Fibonacci trading. And it's a real treat for you to have a chance to sit with somebody that has been a trader for 30 years and the market knowledge that type of individual can bring to you. And I want to introduce you today to my personal friend and somebody that taught me a great deal about the markets, Joe DiNapoli. Thank you.
Thanks, Merrick. Merrick's my friend, personal friend. I really like Merrick. I'm not here because Merrick is my friend. Two reasons. One, I want to educate you. Second thing is, something's happening here which I think has the potential, not the certainty, the potential of being really important to all of my clients. Not just you guys, but all of my clients. Here's what it is. Let's assume that we can get a really good basis on technical analysis. I mean, something really, really good. Like what I'm going to show you. If we had this information when I was trading futures back in 1982, 1985, 1988, can you imagine? Now, some of us had the power because of our connections and the quantity we traded to have sort of special connections, special abilities in the S&P. But that wasn't available to most of my clients. And I can't tell you how frustrating it was for me. Since then, when I do private seminars, I spend an hour, 2 hours, 3 hours sometimes talking about what goes on in the pits, talking about order flow, et cetera, et cetera, et cetera. The advantage to what's happening today is that if you can use a really high-quality trading approach, technique, like what I'm going to show you, if you can afford the software which helps you to implement that technique, AT Financial, let's say, and if you can get a window in the market, so many more of you will be successful. Now, why is that so important to me? Two reasons. How many of you have seen the movie Gladiator? Any of you seen it? Okay. When I was a little boy, and I used to watch those sandal movies, those Roman sandal movies on TV, I thought, wow, man, I'd love to be a gladiator. Wouldn't it be so cool, But it also occurred to me that if I was a gladiator trainer, it would be that much better. Or at least as good. I'd like to do both. Because here's these people trusting their lives to this gladiator trainer. Well, you guys, in a sense, are at least partially looking to me for your financial well-being. And, I mean, you're going to be gladiators out there in this world of online trading. And I take an awful lot of pride in seeing my clients succeed. It's very, very important to me. That's a personal reason. Selfish reason. Let's talk about selfish reasons, all right? How many times have you seen an advertisement in Stocks and Commodities magazine or Futures or anywhere else for that matter about Joe DiNapoli's trading approach or about Coast Investment Software? That's how many times. Who does our advertising? You do. Successful clients talk, get on the internet. They talk about the kind of results they're having. So it's selfish too, in a sense. We want you to be winners. We're going to do our best to make you winners. It's important we get on the same page because generally there's a lot of misconceptions. What was the Dow was down 300 points today? Is that right? Anybody want to give me a trend for the Dow? What is the trend of the Dow? Down?
Depends on the time frame.
Okay. You can't even say right now that the trend in the Dow is down because on a 5-minute chart it might be up. It may have turned around on a 5-minute chart. It may be having a retracement. The point being that if I ask you what is the trend in oil, what is the trend in Microsoft, what is the trend in the S&P, it is a senseless question because I have to say what is the trend given a time frame. What do I do? Well, it's simple. What you do is you define the time frame you're looking at and you define the trend for that time frame, and that allows you to act. If you don't define the trend, just, write a check to your favorite market maker. Okay? Write a check to the floor, or better yet, a charity, because it's going to go. The next thing is leading and lagging indicators. Anybody want to give me a definition for a lagging indicator? I see we have an aggressive, knowledgeable group. I'm sorry? That is a type of lagging indicator. That's correct. But can you tell me maybe what a lagging indicator is in general? What did you say, sir? Something that just had passed. All right, we're getting there. All right, the idea is that a lagging indicator more or less tells you what you should have done 2 days ago. Tells you what has been. We are now in a buy, we're now in a sell, whatever. Okay, how about a leading indicator? Somebody want to try that? Money flow. Now, you're giving me a type. Give me the definition of what a leading indicator is.
Where it's going.
Where it's going. I'm sorry? A future trend. All right, we're getting close. Here is an explanation of what a leading indicator is. Market's falling. Down. Hey, the market's going down. But look, there's support down here. Ahead of time, you can predetermine a support level. That's what a leading indicator is all about. Here's how I trade in a nutshell. It's going to be based on this simple statement. I buy dips in an uptrend, sell out predetermined profits. I sell rallies in a downtrend and buy back at a predetermined profit. That is it. That's the whole game. Nothing more. Buy a dip in an uptrend, sell a rally in a downtrend. Now, in order to do that, what I do is I first decide, is the market going up or down? And after I figure that out, I then apply the Fibonacci work primarily. There's one other leading indicator called the oscillator predictor, but let's stick with Fibonacci work because we have a limited amount of time. I apply the Fibonacci work, and that tells me where the dip is. It also tells me where to place the stop. It also tells me where to get out of this thing. So it gives me a logical profit. So when I get in a trade, I know ahead of time where my stop is. I also know where my profit objective is. And having real profit objectives in the market is so incredibly important. I mean, I don't know, except for large money managers that I know, and even some of those have gone to predetermined profit objectives. I hardly know anybody that trades without a predetermined profit objective. Or they'll sit there and they'll watch order flow and they'll go, whoops, and they'll get out. All right. There's 3 categories, I think, that are really critical and really important for you guys to pay attention to make money in trading. First is management. You have to be able to manage your capital and yourself. The second is competent trend or directional analysis. Well, that's a mouthful. What do I mean by that? What I mean is the market going up or down? That's all. Is the market going up or down? The The third thing is the leading indicator work. And that's the very last thing you do. For those of you that have read my book or looked at it, you know, I'm known as a Fibonacci expert. I have that reputation. I speak around the world on the topic. I don't get to it until chapter 8. People buy the book, and I don't want them to start at chapter 8. I want them to start at chapter 1 and get the context for the trade. The context for the trade is where it's at. If you don't know whether the market's going up or down, or at least have a pretty good idea, trying to use Fibonacci work to figure that out is at best extremely difficult.
Hi guys, this is Joseph Axano from axanocapital.com. I'm extremely honored and fortunate today to be interviewing my personal trading mentor, Joe DiNapoli, right here from his trading room in Bangkok, Thailand. Welcome, Joe.
Thank you, Joseph, and I'm glad to be here. I just hope it does the people that are watching the video some good.
Joe, you've been trading the financial markets for more than 40 years and have trained thousands of professional traders worldwide. Your legacy has been nothing short of amazing. I'm sure many of us would like to know how your love for trading the financial markets started. Would you share with us a little bit on your trading journey?
Well, trading journey is a long one. The whole story probably starts when I'm 7 or 8 years old. I used to walk into the living room and see my father sitting at the table, and he'd have newspaper unfolded in front of him and one of these big adding machines. I mean, this was this big clunky adding machine that you pulled forward and go, and he'd be recording something on the adding machine and looking in the newspaper, and I knew it had to do with stocks. So I was always very interested, and I asked him about it, and he said that he'd tell me all about it. One day when I was ready to learn, I said, well, I'd really like to open an account and have an account with you, same as you have, when I'm old enough. So this went on for some years, and when I hit 15 years old, I pestered him enough. He decided that I could open an account with his broker, and at 15 years old, I bought my first stock. And that was when I got my first taste of it. I didn't really start seriously investing until I got out of college, some years later. And then about 1980, I decided that this was what I wanted to do with my life and do it full time. And I got involved with leveraged futures and various other highly leveraged items. And that's when I came into this whole development of DiNapoli levels and leading indicators and all that sort of thing.
Right, it's more of a lifestyle choice.
Absolutely. I think, and that's an important issue. You know, lifestyle choice is what this trading thing is all about. You're not working for somebody. You know, you can go to work in your underwear. It's who cares? You know, who's going to see you? So it's really a lifestyle choice. Pick your own hours. If you want some time off, you can take it. If you go someplace, you can literally take your laptop with you, and you're still in business. A lot of the places I go to, if I'm speaking somewhere, one of my requirements is that they provide me with an extra monitor. I plug it into my laptop, and I can still trade from wherever I am.
I know you started trading with just $600, but what is the capital required to start trading today's markets?
Well, you could, if you're going to use trade in the stock market, you can trade 10 shares of stock and start out with a couple $1,000s. I mean, making money shouldn't be the objective when you start. Learning what the game is about should be the objective. And once you get consistent, then you can think about making money. But today, when I got started, this simply wasn't the information, and nobody was doing leading indicators. Today, you've got a glut of information, and the main problem is to try to separate what's good from what's bad. That's a huge issue. So if you can get onto something good, you just save yourself a whole lot of time going down the wrong path.
I'm sure having an experienced trader to provide guidance would shorten the learning curve tremendously.
Yes, of course. I mean, what you want is a teacher that doesn't give you what you want, but gives you what you need. And you've been through a couple of private seminars, and you know how I press people on certain elements of what they need to understand. And it's tough love. I'm trying to get them focused and see where their flaws are. Their strengths may be obvious, but their flaws may not be, and that's what I try to focus on. And you need somebody that's going to be honest with you, not just fluff you up and tell you how much money you're going to make.
It takes passion for the markets and a passion for teaching to be able to do that.
Yes, and the fact that I care about my students. I really care about my clients. And that means being as straight as possible. Not impolite, but straight as possible. Listen, I have invested at times of war. I invested when the trade centers were hit in New York, and when the markets opened back up, I was there. I was there in 1987, traded the Nifty 50, back in the late 60s. I've traded all sorts of markets. I made money on the Japanese earthquake situation. I had a number, the thing opened right on my numbers. I made money on that. This is all normal. I mean, that's what it's about, is all this craziness brings out the profitability. That people lack financial knowledge. Most people do not understand the fractional reserve system we have for banking, and we have had for 100 years in America. So, yeah, people need this kind of information, but schools don't teach it. Now, conspiracy theorists may say that schools don't teach it because those that are in control don't want it taught. That may be true, but my experience is that the teachers don't know about financial information. And so how are they going to teach it?
Would you share with the beginner trader the right approach to trading that will give them the best chance of success?
Well, we've talked about stuff like dedication and getting good software and spending your money, spending some money on education as opposed to putting your money in the markets and trying to make money right away. My approach has got to do with leading indicators. I try to get out in front of the market. I have good indicators that tell me where support and resistance are going to be ahead of time. So I certainly recommend that approach. Getting basic information about markets first and finding a good teacher. Mentor might be a little strong, but at least finding a good teacher who will set you in the right direction. And then opening a small account. When I say a small account, I'm talking a couple of grand. If you got to trade 10 shares of stock, that's fine. You're not trying to make money. You're trying to learn. And take it piecemeal, bit by bit by bit. Well, trading with DiNapoli levels, now, I don't know, it's in at least 10 or 11 different languages around the world. It's a very good comprehensive trading book. And it's a tremendous start for learning how to trade leading indicators. I've got a trading course as well. And that talks a lot about money management and psychology. There's a DVD out as well, for particularly for people who trade stocks. I haven't done 10 books, done one. The book project was huge. It was a big enterprise for me because I wanted to get everything in there that I could get in to get the trader headed in the right direction, without making an 800-page book. And I think I did a pretty good job achieving that. I also had tremendous help in the editing of the book, and there's acknowledgments in the book for anybody that cares to go to that level. The reward, it's giving back. If you go to the website and look at the testimonial page, there isn't a day go by that somebody doesn't send me an email thanking me for helping them. And I feel pretty good about that. I feel a camaraderie actually I have a lot of respect for anybody that tries to do this, and the fact that they've come to me to help them learn, and if I've been of some help, that's a big deal for me. I think that's great. People do express their appreciation because this is a tough game.